Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And before jumping to the charts, don't forget, smash the like button and subscribe as well. And now let's jump into the charts. So let's take again, before checking what we have today, let's take a quick look in the past again. If I'm not wrong, this is my second video for SPX. And this time I want to show you something that I didn't show you before. So first let's take a quick look here again on 2000, right after 2008, and then our current action, okay? So in this scenario right here, we didn't had dead cat bounce. It was a moderate move, in my opinion, not a straight dump or a straight crash. But as you guys can see, after some time, actually at some point, all the moves starts to be way aggressive. Not actually this one, but this one right here. And this is because we know uh, that the market behavior is not organic at all, and the US economy is not surviving, can't survive a long bear market and a long retrace period. Yeah, so let's take a quick look here. So for the first scenario, we have this move right here. Let me show you. It was 141 retrace. Just one moment. I'm doing this because if we understand what we have had before, we will understand what we have now. Okay, so this move right here was 141% retrace compared with the previous one, okay, which is healthy, especially for strong bull markets, okay. And now let's take a closer look on this one right here. That's very similar. Just a moment. Yes, 127%. And here, like I said, we didn't had a dead cat bounce or a loser's rally here, but here we had, if I'm not wrong, I showed in the my previous analysis. Just a second. Yes, now let's take a closer look because it's very small. Yes. So as you guys can see, it was a healthy retrace back to the mini. I mean to the golden mini. As you guys can see, 61%. And now let's take a closer look on what we have today. So this move right here, very similar with the other one that we had before. Oops, second. So this was a 141% retrace, which not that aggressive. This is like I usually say, this is about price against momentum against time. As you guys can see, doesn't matter if we take a long time to go back to this level or if we reach in a straight move, okay. The market makers are well aware of such levels. And now let's take a quick look here at this candle, the previous one. it's all the way bearish. Okay, we had a strong rejection here, and okay, we don't have volume tools here, no problem. And so now let's take a closer look for a possible down theory taking place, which is 50% retrace. Okay, so a 50% retrace will lead us around 16,980 points. And here there is a thing, folks, very key thing here. So this is our previous bottom, right? So no news about it. Let's use a dotted line. And what do we have here? This level 1597, in my humble opinion, is not going to be retested, okay? But it is possible. And why? So for the sake of this example, let's draw the other line here. Just one more second. 1597. Uh, 16,980 actually. Just a second. 98. Okay, perfect. So this one here stands for the 50% down theory. 50%. And this one is the previous bottom or previous low. And here we have this key level 1597. So in my humble opinion, what I'm expecting or what may happen, so a strong sell-off here, which in my opinion is going to be a very healthy correction. So we have two setups here possible in my opinion. The first one, I don't believe it's a big deal, okay, to stop at this level, because flat lines, in my humble opinion, are not welcome, okay, are not all the way bullish. And so if we end up with a straight move down following down theory, this would be fantastic, because it would be a new low compared with the previous one, right? And even for a more aggressive move, we could see something like a straight breach and then start to recover right after. Or maybe even a even more stronger move, and then we start the recovery. So again, these three levels are very significant, and we have to watch out: 18, 12, 16,980 and 1597. Okay, and let's just take a quick look for the size of the previous corrections. So 50%. One moment. 57%. Take notes here. 50% for correction. And this one I will use the R for retrace. Retrace. And this one was 58%. Just one moment. 57, 96. 96. Okay. So folks, just a second please. Oh, sorry, I'm back. So yeah, oops, this guy is misplaced. Okay. So as you guys can see, a 50% retrace here around this level It's not going to be something from other world. Okay, something like impossible, or it's going to ruin the markets. No, not at all. And again, I'm going to measure this scenario right here. Okay, just like the same way I did for the previous ones. And remember, this is nothing new. I already did this many times in other charts, and you guys know how accurate this is. So let's go for a 50%. And for this scenario right here, is going to be another 127% retrace, which in my opinion is all the way healthy and necessary as well, because we know nothing can keep going up forever. Let me see, 141, 127, 127. Let me see. Okay, so folks, we have past correlation. So this is nothing new, okay? And again, in my humble opinion, I believe this can happen, and it looks like we are very close, okay? And there's another thing. Yes, I was forgetting here. So just the same way we did in the other periods, let's take a measure here just to check how aggressive this move was. If I'm not wrong, it's 80% attack. Let me see, just one moment, please. No, give me the black. Yes. So folks, I don't, let me see. The high was 3,233. 3,238. Okay, so let's take a zoom here. So it's not clear, but let me describe to you. This tail here, the high. So 32 moment 3.1. So this was the high for the tail for the previous month, and the 80% for this range is 3238.3. Yes. So as you guys can see, we don't have any confluence at 80%. Let's take another note here. Yes. So we don't have confluence despite the aggressive move. And in my humble opinion, this is bad news, okay? Because as you guys can see, we are still trading inside the previous rejection, okay? And again, this is the monthly chart. Everything here is powerful for the bull side and even for the bears side. Okay, so folks, let's keep watching the coming weeks. I believe we are close to the final outcome, and yeah, I think for now this is it. Thank you guys for your time. Thank you guys for your patience, and thanks for your support as well. I'm going to see you guys soon. Thank you. See ya.